Hello, welcome everyone here. Here we are going to begin with the practical modules, and the practical modules are concerned with the practical problem solutions. I just want to tell you everyone, whenever you are going to refer the video lectures regarding the practical problem solutions, all of you have to keep one thing with your hand, that is the questions of respected problems which I am going to solve here. So simultaneously, whenever I am going to try to solve the questions, you just keep it the questions in your hand. Here I am going to start the first question and the module of number 2, that is analysis of financial statement. Analysis of financial statements having many methods to analyze the financial statements. As we have 5 methods like comparative analytical statements, trend analysis statements, case flow, fund flow, the ratio analysis, and this type of statements and this type of analytical methods, how it would be applied here for the solution of analysis of financial statements. Here I am taking the first method, that is trend analysis. And the trend analysis is ultimately a method where the comparison between the number of years of the same company. That means person who is actually trying to analyze the financial statements, he would be trying to get the at least minimum informations to show the trend. And that's why here in this question, in this problem, the company's 3 years balance sheet data is available. And that 3 years data has been compared with each other, and they find out the trends, and on the basis of this trend, the company may be taking the decisions for the direction where the company is actually moving. So here, this question number this is actually try. I am not taking all the informations. The balance sheet have many informations. When you are going to refer to questions, you would be getting an idea. The whole balance sheets and profit and loss account is given in this particular problem. But few items are actually taken to explain how these things would be calculated. That's the step number 1. And what are the effects of the particular changes. And for the changes, how the calculation to be begin. So see here, as per this balance sheet, when we are actually applying a method of a trend analysis, you can draw the structure like this. Where the particulars are given, whichever the years informations are given, and the how and where you are going to compare and what would be the outcome of your analysis. So here there are 3 years data, and that 3 years data, the some years you are going to take as a base year. So now here the base year is 2009-10, this is a base year. On the basis of this base year, the 10-11 and 11-12 informations which we are going to get it. So for here, when you are going to get it 2 years information, the 2010-11 percentage and 11-12 percentage are to be find out. So this is actually a trend analysis on the basis of the base year of 2009 and 2010. So now here we'll just refer the one by one item where the actually the company's trend has moved. Say for example, start with this current assets. So here the current assets number 1, that is cash. See here the first year information is 22,000 rupees. In the next year the cash balance is actually increased up to 1,18,000 rupees. So now we will find out the changes between these 2 years. As I already mentioned, the first year is your base year and remaining 2 years are going to compare with the year 2009 and 10. So now the changes of this particular concern, how it would be find out the change. See here, the percentage is find out, it's very easy. Now here it's 1,18,000 in the current year would be compared with the 22,000. So this is the way to actually find out the percentage of changes, and that percentage it comes 536.36%. So it means that the 2010-11 cash balance, closing cash balance is actually increased by 536.36% as compared to the base year of 2009 and 2010. This is a change of the current year. So if the base year is 100, this year would be changed as 536.36%. Now we would be compared for 10-11-12. Again the base year is remaining same only, 2009-10. And the comparisons with the 2009-10, what would be the changes? What would be the find out the outcome? In a simple way or in a prima facie observations, you can easily identify that your cash balances decrease as compared to the base year. But we need to identify how much percent decrease. If you are going to see and calculate it by the same way, then you will find out the answer, that is 45.45%. So it means that when it is find out the 45.45%, it means that if your base year is 100, the next year was increased almost 536%. Then the next year, that means in the 11-12, you find out the change of 45.45%. It means it's as compared to the previous year, it goes down. It's very close to 500%. So this is a trend. So in that case, if you identify a trend of cash balance for 3 years, maybe your base is 100, then it goes up 500, and then it comes is almost negative. So here 100, then 45. So this is a trend of the company when the cash balance has moved. Start with this 100, maybe goes up to a certain percentage of 500, and then it comes below 100 at 45%. So now the same way, in the same method applied for the bills receivable also. If you are going to apply this bills receivable and change the comparisons, the comparison is again applied in the same manner. This is a base year, and this is a position of a 2010-11. Applied the same formula and same method and find out the percentage. So here the percentage shows is 125%. It means that as compared to 2009-10, in the 10-11, it was increased by 125%. It means it is increased net 25% as compared to last year, because of the base year is 100. Base year is 100. So when you are comparing 100 and 125, so the 2010-11, it increased by 25%. In the next year, if you are going to compare with the base year, then it would be find out the 140.63. It means very close to 141%. So now the trend in this particular case, you identified that here in the case of 2009-10, it is 100%. In the case of 2010-11, it comes 125%. That means it's increased 25%. And in case of 2011-12, it's almost increased 41%. So it shows that it's continuously increased in case of bills receivable. So this is a change in case of the amount of percentage change, and that percentage has been changed, is continuously increased. So here in the case of debtors, you would be getting an idea that the base year is 9-10, and as compared to 9-10 in 10-11, it's decreased. So first base is 100, but in the case of the 10-11, it decreased almost 18%. Because of the base year is 100, it decreased 18%. And again in the year 11-12, it's decreased more 10%, that means almost 28% than the base year. So debtors are going to decrease, and that trend shows debtors are decreasing more. Now see, in the case of fixed assets, there are two samples of fixed assets taken for explanation of this particular problem. In the case of the 9-10, the building having a value of 28,000, which goes down in the 10-11, 23,000. That means it shows a negative impact. So base year is 100, but if you are going to see here that the 82% is showing, that 82% showing because of the amount of building has been decreased as compared to the base year. But if you are going to see in the next year, in the 11-12, it increased, not only increased from the previous year, but also increased from the base year. So it automatically changed, shows here almost 129%. So base year is 100, but now in the year 2011-12, it's 129. So it's almost increased 29% as compared to the building. So its trend shows that the situation is not stagnant. In the first year as compared to the base year, it was decreased, and then suddenly it was rise almost you can say a 50% than the last year decrease. Same way you can see the furniture, and the furniture it actually shows the position that the first year, that means in the base year it was 31,000, and the comparison of the 2010-11, it decreased. So it shows 84%, it means almost 16% down. But then you see the next year it's increased 26 to 41,000. So if you are going to compare these two, you can easily identify that is almost increased 50%. But as compared to the base year, if you are going to see, then you would be find out the increase of 32%. So this is a way to find out the changes and deciding a trend analysis. The same way you can calculate it for liabilities also. In case of liabilities, you see equity share capital. Equity share capital last year it was 4 lakh. Then the 9-10, last year it means the last to last year, 9-10 it's 4 lakh. In 10-11 also it's not changed. That means whatever it is carrying in the 2009-10, in 10-11 also it's same, so it's no change. Same remains 100%. But in the another year 11-12 it's increased by 1 lakh, so it shows here 125%. So as compared to the base year, you can easily say that the amount of increase by 25%. So the changes in equity share capital, it's 25% increase as compared to the base year as well as the last year. So the trend shows it is a little part of, and gradually it increases whenever the amount of capital has been required in the firm. And this reserves and surplus also shows the trend that it's decreasing mode. Base year is 90, then it shows 80,000 and it's 42,000. From the value itself, you can easily identify that your RN reserves and surplus has gone down. But if you want to find out in a simple mode how much percentage goes down, you can easily identify it from this percentage and you can decide the trend in which way it goes. And current liabilities also, it shows how the current liability is moving. Bills payable, as compared to the base year, first year it was actually increased, but the next year it goes down like anything. So bills payable trend, it shows not a clear picture. It is a very volatile as per the 3 years comparisons. So this is what all about a trend analysis, and this trend is actually disclose the informations regarding the financial statement analysis. This is a balance sheet portion. Now we will move for the explanation of a profit and loss account. The balance sheet analysis we already seen. Few observations if you want to see from the balance sheet analysis, you can just check it out that the liabilities are actually volatile. In case of bills payable, it was little bit volatile. In case of the amount of the creditors, that is also invariably changes. In case of a building also, when you see the fixed assets are especially building and furniture, 2 example was taking that the first year it was not at all actually increased. Rather than increase, it goes down, and then suddenly the next year it is increased. That means from the second year you see the amount of fixed assets has been investment more. So that time the liquidity has been transferred, or maybe the amount of cash and bank balance has been transferred for a longer period of investments. Right, so this was the general analysis of a balance sheet. Now that is trend we identified. Now here you see the comparisons of the profit and loss account, and now we will just identify the trend as well as some analytical parts from the few observations and taking the few examples. I did not take it the whole profit and loss account here, but few items I was actually taking here, and that explanation, almost the remaining items would be sold out in the same manner. So once you get an idea, you can directly do it by yourself also. So just see how the changes are actually occurred here. The first is taking the first part, that is how to find out the gross profit. The gross profit you can find out sales minus cost of sales. So what we did actually, sales we have all the 3 years informations here. Then we minus the cost of sales from it. First we find out the percentage of changes in the sales. Now see, in the 9-10 they have a sales of rupees 7,91,000, and in the 10-11 the sales is actually increased some percentage, that is 8,30,000. So 833, the changes of percentage if you are going to see here, it shows almost nearby 5%. Because of the base year is 100 and it shows in the 10-11 it's 105%, that means 5% increase as compared to the previous year. But if you are going to see in the 11-12, that increase up to 9,35,000, which shows 118%. So as compared to the base year, it's almost increased 18%. The sales increase, it shows the trends. Every year sales increase by certain amount of percentage. But Now the analysis is very important here. See the cost of sales here. Base year is 490 as compared with the comparisons with the 5,10,000. If you are going to see the changes of cost of sales in 10-11, it's 104%. That means increase by 4%. So if it is increased by 4%, that means see the difference of your sales. The sales increased by 5%, cost of sales is increased by 4%. Maybe it would not be much impacted in your profitability. That is actually affected here. See here. Now the cost of sales is increasing in the 11-12 like 5,82,000 rupees as compared the 490 base year. In percentage, it's increased almost 19%. That means it's increased more than the increase in a percentage in sales. It would be directly affected on your operation gross profitability. So see here the gross profitability is, in this case, it's increased by 7% as compared to the previous year, but here it is increased 117%, that means only 17%. So this would be affected. This is the first analysis, and that trend analysis, it shows the picture. The gross profit is increasing. First is 7%, then if you are going to see the 10% is increasing, so increasing. The trend is increasing, but simultaneously your cost of sales is also increasing in same proportion or maybe some year more than the expected proportion. In case of another example was taken in the same from the same example, that is related to a profit before tax, then the tax liability is deducted from it, and then identified of the profit after tax. Now see here, the base year is PBT is 49,000, then it goes to 55,000, and then the next year is 75,000. So somewhere there might be control operational expenses